Wow, we saw some really strong price action to the downside in gold and silver and a break of an important support level. Is this indicating there's more to come? Let's have a closer look. What we can expect, what's the next we can do, and how we can react on this market situation. So stay with me, and I'm looking forward to talking to you. Yeah, I mentioned already that the precious metals saw a really strong drop, a fast drop to the downside, and this might be really important. Some people are telling me, yeah, but this is only chart technique. How can you think of, even imagine that you can see the future out of the charts? Of course, we are not doing this. We don't have a crystal ball, and also the price levels here in the market are not an evidence for what is happening next. However, we can read how the market participants are currently acting on the market situations, on all the market news, and how they should answer and should react on certain instances. So I think this is something worth having a closer look. And the good news is this is working really, really nice in many cases. And we had this in with a turning point on the upper side of the trend channel. But what did I tell you? I show you in the chart that's easier to follow. So let's start with gold, and you can see that what we've seen here is a really typical situation in the market. We had a strong move to the downside. I drew a trend channel here, and I suggested, this is really important, I don't want to give you the impression, oh wow, he knows everything and he knew that the market will turn here. No, that's not the case. I said at that point, the chances are really high. So it's really important around this area here, in the upper part of the trend channel, if you have some kind of resistance levels, in this case it was something like a projection here, for example. If you see something like this here, the first part, and this here in the next part, you have also the 78.60 Fibonacci level here. So these levels are giving you an indication some market participants will think of buying now or selling the profits they had so far. So this is really important for me. Never have the idea of trading like knowing what the future is bringing and this or that is an evidence. It is only dealing with probabilities and finding situations that are typical for something and then go with the most probable outcome. So if you see something like this, you should expect that the market will turn. And what you need, of course, is seeing that the market is moving fast and taking profit for maybe if you're on the bullish side, because the chances are quite well that the market will turn around this level. So this happened already. We shouldn't talk too much about this. What is the future bringing? Because we were breaking quite obvious support levels. We had this intermediate low here from the January 18th, and we also had this one from January 7th, which is a quite typical break through an ABC pattern. And it is very typical that in the aftermath, the market is following the strong movement, which was a down move. So it is more than typical. It's not 100% sure, but it's more than typical that the market will continue and have something similar here to the downside again, which would lead the market price roughly around 1720 plus minus whatever, but around these levels here, which is indicated also by the low here in September, end of September, end of September it was, around that time here, around 1720 in this case. So is this obviously a good opportunity to sell short? No. Not at that price. And this is something really important. What I did so far was analyzing the price action like an analyst, talking about what we see, what the market participants did so far. But this is not what we do as a trader. As a trader, I now have to think of, is this a good trading opportunity? Thinking, let's say, have an educated guess that the market is reaching this level here is not necessarily leading to a trade. This is only leading us to what idea can we make out of it. As a trader, it's more like being self-employed, having a new small business maybe, and finding good opportunities. How can I answer the current needs of the market. And the current need is that we have something like this in the next few, let's say, days or weeks, or maybe in some near coming months, maybe February or March. But what is a good trading opportunity out of this? I would not sell short the market at that price because currently we had really strong movement here to the downside. What I definitely like to see is some counter movement, which is quite weak. You may remember this part. This was quite strong, and you can see this is quite weak here. And you could expect that the market is continue here when the market is breaking through this level. So in this case, this part here is somehow similar or comparable to this movement here. So what I want to see is something like this now, which may look like this. Or if it's not like this, so it's a back forth, for example, it may only look like an ABC pattern. But this is also giving me a good indication to sell short. So you can play this game to any time frame, down to any time frame. You can sell short the market at that very point, or you can say, yeah, but when the market is reaching this, I can wait for the next on a lower time frame. This depends on what time frame you're feeling familiar with. If you say I'm working in daytime, I cannot follow the 5-minute charts or 15-minute charts, you can stick with the 4-hourly chart, which is not necessarily forcing you to check the market every 4 hours. It is also giving us the information how the market is doing his job inside the price pattern. So you can see more details here if you see this in a lower price scale. So I think 4-hourly chart is something you should check, even if you want to check the market only 1 or 2 times, every second day maybe, or once a day, or every second day, or even every third day. You should check the 4-hourly chart to see the internal structure of the market, because you can see this is taking from 7th of January, for example, to the 18th. So this whole movement from here to here is more or less 10 days. So you can see this is something you can also follow if you want to check this only on weekends, for example. Have a close look at this lower time frame charts as well. If you're an intraday trader, you should switch also to 15 minutes, 5 minutes, whatever you prefer, to see is there any opportunity with some kind of a strong movement and a weak movement. If you see something like this, maybe you feel happy to sell short the market if it's more or less like a shaky pattern or an ABC pattern to continue here to the downside. Currently, by the way, having a look at the 15-minute chart, you can see that we are in an up move, but you can also see currently it does not look very convincing here for the bullish side. So what I would expect is maybe the market is going a little bit lower once more. This is not a big deal. It's only a few points or a few dollars in this case. Before, hopefully, soon the market is giving us something like this, which is quite typical because the market is loving false breakouts. And what we have here is exactly something we call a false breakout, because the market here was breaking this level. Some people are saying, yeah, now I have to go short. Yeah, well, it's not really smart, because very often when you have a breakout, the market is coming back. If you have a breakout, the market is coming back. If you have a breakout here through this level, the market is coming back. Breakout, the market is coming back. So this is not necessarily meaning that the market needs to go there. It is only like the market is coming back a little bit. And if the market is coming back in an ABC pattern or corrective pattern, this would be a perfect situation to sell short the market. Why is it like this? Because we have a strong movement here. This is not given now, it's just fantasy what I'm drawing here. But it typically or very often looks somehow like this. And if you see something like this and you have this last intermediate low here, you can say, okay, we can expect at least this one, which should lead the market roughly around 1740. But in this case, we can think, yeah, what we are leaving this level here, we are expecting that the market is even falling below that, maybe even reaching 1720 or even below that level. So we can stick with the position. We don't need to track profit at that point. We can even follow the market position to lower lows, which may lead us to, let's say, low 1700 levels here around this. I know many people hate me for saying something like this because they say, yeah, but gold is something against inflation. It's very good to have some. Yes, I'm not against this. If you want to deal with this, if you want to have some gold bars or whatever, or coins in your backyard or in your wherever you want to keep it safe, if you want to keep them, it's okay. And it's not so much a deal whether you buy it 1800, 1700 or even 1600. It is more like having this as a physical backup for some kind of money you have. You're normally euro or US dollar or British pound or wherever you are from, or what currencies you prefer, but it's good to have some. But in this case, this is a trading deal. This is something for us as a trader. If you want to have a short-term opportunity out of the market, in this case, a short-term short setup, which is giving us a good opportunity to sell short the position, buying or first selling around these levels here, depending on where the break will be, and buy back this position to close this on lower levels, maybe around these levels or even a little bit below. What should we expect? Some people are asking me, yeah, but that's all, nothing more should come. Well, to be honest, I would not be surprised in case the market is reaching even this area here, which is roughly below 1600, maybe even 1500 is possible. It not necessarily needs to go there. Please don't get me wrong. This is not a secret promise saying, yeah, you definitely should expect something like this. But you should not be discouraged if you see something like this. This is a very typical, a very normal price pattern, which is the same like we have here at a lower time frame. I mentioned this so many times before, or even here, or wherever it is. We have a strong move to the upside. Lovely. We have the typical corrective pattern to the downside, also lovely. And we can, and of course we should expect something like a turning point around this one. It is more or less exactly the same like I've mentioned here before. This is not a promise the market will turn here, but I see because of the beforehand situation here that the market was quite strong. Currently it looks like in a corrective pattern because the overall situation here, all the down movement here does not look really strong. We have so much overlapping here. So this is indicating that the whole downtrend here is something like a corrective pattern. In case this is a corrective pattern, it is counter trend. If downside is counter trend, and before we had a strong movement to the upside, the main trend should be upside. So I'm a bullish guy here in the big picture, but currently I don't think that's a good buying opportunity. So if you want to have physical gold, maybe you can wait for even lower prices to enter the market. Or if you want to stack up or pile up your position a little bit, if you want to buy more physical gold just for backup, maybe you have a chance to buy it even a little bit cheaper. And later you will have the best success with it. It may last for a few months. You can see if this is happening roughly in this time schedule here. We should expect this will be in summertime, maybe early summertime, maybe even a little bit later this year, that the market is turning around. And around this level, we can have a close look whether we have some strength here or not. However, coming back to the shorter time frame, currently I see the better opportunities on the lower time and for the short side, because we have strong movements here and only weak movements to the upside. If this continues here on the lower time frame, I definitely want to sell short the market and trade the market short for lower ends here into this area. And this is completely in sync with the, let's say, middle term picture here in the daily chart. You can see here from March last year, roughly 1 year. From last year, it's 10 months roughly. Until now, yes, it is a bullish market. The market came up. But please compare something like this, compare it with this. This is looking really, really in a corrective manner. So I'm quite sure that the most market participants are not eagerly willing to buy. They are really cautious currently. You can see this by the strong drops we have here. And whether we understand it or not, so many people are saying, yeah, I don't understand this, the market should move the other way. If you're in a supermarket, it is not, you should buy salad and not too much meat or no chocolate or whatever. It is what is in the shopping cart. So it is not important what we think it is useful to buy in a supermarket. It is more like, what are they buying? Okay, I see they are doing like this. If it's in the shopping cart, you know they will buy it. No matter whether this is useful, healthy, or whatever argumentation you have. So in this case, I have wonderful argumentation where the market could rise at the very moment, but currently the market participants are not willing to buy, and that's what I'm dealing as a dealer, as a trader. I'm just trading the market situation, which is currently not looking too much to the upside. So switching to the silver market, this is silver against the US dollar. And in this case, we could see that the market is coming down here as well. It is quite a similar situation. If you have a closer look, you also see it's just an eye training. We do this eye training. If you see something like this, expect something like this here. Sometimes it's not 100% all the time. Of course, it's not. You see even the 5-wave pattern here. Maybe you can see it slightly here. This is a typical wave movement. We see very often that the main trend is moving in a 5-wave pattern. So we have a strong impulsive move here, an ABC to the downside, another a 5-wave pattern to the upper side. That's good. 5-wave, isn't it something we can see roughly maybe here? Yes, it looks a little bit like this. So the same idea with silver, even not breaking this level here so far, I would expect that somehow in the near future, the market is coming back. It can be below this level. It can be above this level. I don't know this. I cannot see the future. But in case this is happening, and in case, this is really crucial, the market also is breaking through this intermediate level, I would sell short this market to expect at minimum something like this again. And the length of this movement is depending on the length of the first movement. So of course, if this one, the counter movement, is coming from a lower point, this is getting longer, and so the expectation for the downside is longer. Many people are thinking, yeah, that's bad, I missed so much of this opportunity. The longer this gets, the longer you missed here, the good news is the longer this one will be. So if you see something and say, wow, I missed a long movement, the next one will be in similar size, very probable. Not necessarily all the time, of course, but probability for this is quite high. So I also see that the silver market is going down a little bit more. I have some ideas where the market can lead us. It might be around the 20 level. I would not be surprised if it's a little bit below the 20 level, because some people are saying, yeah, 20, this is really crucial, really, really important. I don't want to see the market below that. And some people are willing or accepting to push the market below the 20 level. Some people are selling here to the guys willing to buy. So I would expect around the 20 level. It can be below 20. The market will have very nice support here. We also have some intermediate highs here as an additional support. Some people are saying this is something like a cross support. You can see this is more or less helping the market. You can see here, it is not necessarily exactly this number here, but it is roughly giving us an idea that the market can turn. But this is another story. I don't want to deal with the big picture too much. Only for the positive guys. Yes, also I'm here very positive with the market, but I'm not 100% sure it is starting now. I think the chances are better from a lower point, not necessarily exactly here. Please don't get me wrong. It's not necessarily 21, 20, 19, whatever. I don't know the time. I don't know the place, but I know at what places I want to have a closer look. And what do I want to see? I want to see something like this, and some shaky move to the downside. So for all the low time traders, you may see something like this here on a very low time scale. This is something different. If you want to follow this, you have to have a close look here at the market in the next few trading hours as soon as the market is back. But this is something completely in sync with the idea that the market needs something like a setback here in this case. So currently I'm still a little bit more bearish for the shorter time picture. I'm absolutely bullish with the long time picture, but I think if you want to enter the market, I would wait a little bit. If you want to enter the market on the buy side, if you want to buy something, maybe physically or even paper silver, on a longer picture, I would wait. If you want to have a trade here in this market, I see better opportunities here on the short side. And if you are a physical trader in gold or silver, you can, of course, use this situation here and buy some. You can keep your physical gold because it's sometimes a little bit, yeah, do I need to sell it, buy it? This is always giving me extra cost and really painful. No, you don't need to. You can keep your physical gold, but you can trade short. There are so many contracts, of course, options. You can trade the future, of course, if you can trade. Some countries allowing CFDs, for example, you can trade them, or other any stuff of instrument. What you can do here in trading the paper silver, so it's not the physical. It is something like a paper sheet, like a future or a CFD or whatever it is, and you can trade this on the short time frame. On the short side, so you have some profits here maybe, and securing your losses in the physical gold as long as the market is falling, and when the market is turning, you can say, hey, I'm the guy with the physical one, and you can enjoy what you have so far. So that's it from my side. I hope this is helping you for your own trading decisions. You can see it is not like guessing what we are doing, it is more like seeing what the market participants did so far, and deducing some trading idea from this. This is just, finding good trading opportunities. Don't sell too easy, don't buy too easy. Keep an eye on something like, we call it like a trigger line, something like a confirmation that the market is really willing to push through a limit. This is always helping you and giving you a better confirmation, a better probability, of course, and also better risk-reward ratios, what I should expect, show you next time maybe, or another time, how we deal with this as well. But hope this is helping you for today.